Welcome to More Than Renovating, a Renovate and real estate podcast. Our founder, Belinda Smith, talks to industry experts to provide you with the knowledge and information you need to make renovating for love and profit your reality. Belinda will also chat to some of her Renovation Mastery members who are just everyday people doing extraordinary things, following their passions in the renovation and property space. So, let's jump straight into the episode. Enjoy.
Yeah, hi everyone, I'm Belinda Smith from Renovate and Real Estate, and today with me on my More Than Renovating podcast is Mike Mortlock. Mike comes to us from MCGQS.com.au, which is MCG Quantity Surveyors, and we're going to talk today about tax depreciation, about quantity surveying, about calculating the costs of a construction, and lots of stuff. Welcome, Mike.
Thank you very much for having me. I'm delighted to be here, Belinda.
We were just having a chat before about how much we love what we do. And so tell us a little bit about how you got started in your business and what it is exactly that you do.
Yeah, it's a weird thing to say. I'm a quantity surveyor and I love what I do. You know, it's not something that you talk about as a kindergarten kid, sort of saying, when I grow up, I want to be a quantity surveyor. Maybe a policeman like yourself, but not a quantity surveyor. So look, quantity surveying essentially is estimating construction costs. We're the best people to say how much it costs to build something. And so if you think of any reason why you might want to know that, if you're doing, say, a development, or you're building some townhouses, or you're going to court potentially, quantity surveyors are always involved in that, you know, working with banks for progress claims. My special subject, my special area of expertise is tax depreciation, which is, you know, industrial, commercial, residential. In the residential space, that's where the majority of the business is done. So if you own an investment property, then you can claim depreciation deductions based on the fair wear and tear of the property, is probably a good way to put it. And those deductions are they're just like any other deduction. If you're a student, you claim textbooks. Tax depreciation is just an on-paper deduction, and it reduces your taxable income. So anything that reduces people's tax is typically quite popular.
And so why do people go to get a depreciation schedule rather than just say to the accountant, here's my, property, it's rented or it's whatever, claim the deductions you can? What's the advantage?
Yeah, the real difference between us and accountants is that even though we have to be registered tax agents, because we are giving a type of taxation advice according to the Tax Practitioners Board, we don't know anything about accounting. I couldn't tell you how to structure a business. I couldn't do a tax return or a BAS statement. But similarly, an accountant cannot estimate construction costs. So even if you build, say, a brand new property for $350,000, the builder's not necessarily going to say, congratulations on your finished product. You've got $3,800 worth of carpet. You've got a $1,200 oven. You've got an $800 cooktop. That's where we can come in and estimate the breakdown. And if you purchase an established property, let's say you've got something built in 1990, to get a depreciation schedule means you're getting an estimate of the construction cost of that property as at 1990. And let's say it's had a new kitchen and bathroom. Even if that was done by the previous owner, we can come in and estimate the value of those works, and you can claim the deductions based on that. Now, that's something an accountant can't do.
Yeah, agree. And my accountant loved it when I put a depreciation schedule in front of him. Yep. In his words, you just made my job very, very easy.
Yeah, exactly.
Yeah.
And sometimes there are instances where it's kind of like, oh, maybe we could do it, maybe the accountant could do it, but the accountant is likely to charge you a fee. Even if, let's say, you do a $50,000 reno and you have most of the breakdown, it is quite easy for us to put that into a nice, neat package that extrapolates it out and make sure you're claiming it at all the right percentages. Sometimes the accountants will see the value in just getting us to do it, but we like to try and find ways where we're adding much more value than just capturing those costs.
So tell me, for my guys who are serious investors, number one, but predominantly renovators,
yep.
If they've renovated a house or they've bought a house to renovate, when do they call you in? What's the best time to get maximum return?
The answer to that question has changed a little bit, because on the 9th of May 2017, there was new legislation that basically said the plant and equipment component of a property. So that's going to be more the loose assets like the carpets and the kitchen appliances, the hot water, air conditioning. You can't claim deductions based on those items unless you either put them in as brand new or you buy a brand new property. So back in the day, you used to be able to buy a property that's an older property, rent it out for a little while, and then scrap the value of the things that you're going to throw away. So you might have $1,000 worth of residual value of carpet, and as you throw that in the bin, that's $1,000 immediate deduction. Now with that, so in that situation, we like to get in there straight away to have a look at what's there before it's thrown away, rather than telling the owner to chase the skip bin down the street, which is based on a true story. These days, it's probably better to just take some photos of what was there beforehand. And I'm sure all of your students would do that anyway, because it's so exciting to go, this is what it looked like. Isn't it gross? Now look at it and look at the money I've made.
Before and afters.
Yeah, exactly. So we recommend taking some before photos, but it's better off us getting there at the end so we can look at all the things that have been done and put that into a completed package. And you should understand that there's often, even in these older properties, there's often improvements prior to your purchase that will attract some depreciation deductions. I mean, even if there was a bathroom renovation in the mid-90s that you're actually kind of throwing away, there might have been some structural changes that remain, that there are still some depreciation allowances available, or it could have had new guttering or been re-roofed, or the driveway might have been updated, but the whole house is original and that's what you're renovating. So it's important to think about the history of the dwelling, and that's really where we come in over and above the obvious reno that your people are doing.
Yeah, and it's only the stuff that, if you were to go to an accountant and you were to go and say, you know, these are the things I want deductions for, then you're presenting that accountant with what you believe to be the case, and you've just unveiled a whole bunch of stuff that I wasn't aware of that we can claim on.
Yeah.
So huge benefits. Okay, so what's the difference between someone who has, say, a unit versus a house, perhaps versus a commercial property when it comes to depreciation?
We'll start with commercial because that's the easiest one, because there's a lot of different rules for commercial than there are for residential. So the cutoff date for a depreciation claim on the original building structure for commercial properties is different. It's normally 1982, but if it's traveller accommodation, it can be 1979. So that's sort of the date at which the bones of the building can be claimed. So I talked about plant and equipment before, those loose assets. That's kind of one component of depreciation. The other component is the structural part. So the concrete, the timber, the gyprock, the tiles, the cabinetry, all of those things can attract depreciation deductions at 2.5% of their value, whereas the plant and equipment items are a lot higher. So with commercial, there's a different cutoff date for those bones, and those rule changes that I talked about for plant and equipment that happen for residential don't apply to commercial. So that is an obvious difference as well. You could buy a 10-year-old commercial property and still have some plant and equipment depreciation claims on air conditioning and floor coverings and those sorts of things. So that's an obvious one for commercial, and there's all sorts of different plant and equipment categories as well. So, you know, there's about 180 odd pages of plant and equipment items in the tax rulings that come out each year, and really only about 4.5 pages of those are residential. So there's specific things for if you're a panel beating business, manufacturing, beekeeping, agriculture, you know, aquaculture. It's crazy, right? That's commercial, and I'm happy to go into more detail with that, but we want people to stay awake for this.
It's so complex.
Yeah, I mean, like I categorize myself a bit like my accountant. I pay my accountant money so that she makes sort of things like this go away. You know, the technical stuff. I exist so that people don't have to nerd out and, you know, and ruin conversations by talking about tax legislation. The key difference between residential houses, as distinct from, say, units, is units are normally part of a strata plan or a plan of subdivision. So when you buy, let's say, a unit in a complex of 50, the mass on this won't be perfect, but you arguably own 1/50th of all of the common areas. So that can be common foyers, it could be common lifts, basements, gyms, pools, even just driveways if it's a townhouse. So that's probably the most obvious nuance. And then from a renovation point of view, you're only really renovating the unit itself. You wouldn't be doing the common, whereas it's the house. It's all the one kind of entity.
Yes.
And there's a few other nuances to units. They tend to be a higher construction cost per square meter by nature of being smaller and being often high rise. But yeah, the common areas is probably the biggest difference.
That is complex, and I agree with you. I love it when I do my accounts at the end of every year. When I say do my accounts, I package them all up so everyone can understand what's gone on and hand them over. Yep. So I'd be doing the same thing. It's not something the average Joe wants to get their head around, depreciation. So what does it differ from state to state? Does it matter where you live?
No, it doesn't really. I mean, from our perspective, the construction costs obviously differ. But they differ interstate as well, for example. So there's something called regional indices. So let's say we're talking about Sydney as the main reference point in New South Wales. If construction costs have an index of 100 in Sydney, then in Orange, they might have an index of 108. So that means it's 8% more expensive to build in Orange because the materials have to be shipped to Orange, and there's not, timber mills out there. There might be, sorry to anyone in the timber milling industry in Orange. It's pretty niche. Yeah. And the labor costs can be different. So in, far north Queensland, it can be, 80, 90, 100% more expensive to build. But yeah, interstate, things like strata plans and plans of subdivisions are called different things. Places like Melbourne, there's sort of community property. So it could be 5 buildings in a complex. So you might have an entitlement over one building, but then also a master entitlement over shared facilities. But from the end user's perspective, not really. It's just more of a problem for us. But it is pretty sort of flat the way that it's done. It's really just the construction costs that change across the country.
So tell me about your business, as in how on earth do you keep across all of this? What's your team look like?
There's about 26 of us at the moment. And I guess the real challenge is working across Australia. We don't necessarily promote ourselves as a national, but we pretty much are. It's just that there are some places in, where it borders between WA and Northern Territory that it can be difficult for us to get to, but often we get those things done. But yeah, our business started in 2011, just with Marty, my business partner, and myself. I'm the resident tax nerd, and he's the construction cost expert, working with sort of pre-construction estimates and mid-construction estimates, such as progress claims, whereas I tend to work on things that are already built. But we just nerd out on it, right? Like a bit like yourself, when you find something that you enjoy and you're passionate about it, and we actually see what we're doing is pretty integral to the goals of property investors. And people, I think, invest and renovate property because they fundamentally want to change their financial future, and that can be retiring early or sending their kids to a good school or taking around the world cruise. Like, we get quite a kick out of that. So I think whatever you enjoy it and you're curious, then that just kind of makes it happen for us.
And so do you have to get on the ground? Like, do you have to physically go in and inspect a place, or is this something that can be done online?
It's not really something that can be done online, despite some quantity surveyors are sort of promoting that as a service. But I was part of a working group with the Australian Institute of Quantity Surveyors that's releasing kind of a code of practice for tax depreciation services. And one of the key things is that there are very few circumstances where a depreciation schedule could be done online. The most obvious one is if it's a brand new construction where the total construction cost is known, and we have plans and a schedule of all of the finishes, then that's an example where it could be done. But even in those circumstances, we often see a schedule of finishes where it says stainless steel appliances. Now, the difference between, say, a Technica oven and a Gaggenau oven is going to be somewhere around $20,000 or $30,000, believe it or not. Or it might say carpet to living areas. Well, is the hallway considered a living area? And so there's a number of different reasons why we always recommend to go and get that site inspection done. It might add another $200 to the depreciation schedule, but certainly established properties where it's not an exact known construction cost, or where it's a property that's not brand new, it's really dangerous. And the Australian Institute of Quantity Surveyors have basically said any report where a site inspection isn't done, it needs to actually explain those dangers. So that's a bit of a problem with our industry. So that's a very long way to say, yes, we go and do the inspection.
Okay, so what's the wait time? If I were to order, I'm in Sydney. So if I were to order you to come to my place, how long would I wait for you to get there? Or you personally?
Yeah. For
I want you
me,
personally.
yeah, for me, you might have to wait a little bit longer. I've just come from a trip to South Australia and Western Australia, so occasionally I'm buzzing around. But we've got a great team of inspectors across the country, and we actually have a live television in our office where we're keeping an eye on the time it takes from, say, someone giving us the property manager's details to an inspection being booked, to it taking place, to the job being done. The vast majority of our depreciation schedules across the country are done within a 2 to 3 week time frame, and the inspections, they're normally at the moment booked around 5 or 6 days, and we are pretty tight on that, because when we started, we weren't the first quantity surveyor in the space, and we didn't have the marketing budget. It was just Marty and myself to begin with, so we thought, how do we compete? And service was the obvious one. It didn't really cost us any more money, and it's become a real key focus of the business. So our turnaround times are always very, very competitive.
And talking about marketing, I've heard you on podcasts and bits and pieces. Where can people listen to Mike?
Well, they should listen to you as one of the.
They do listen to me.
Yeah, well, they listen to this one, right? But if you're going to listen to my podcast, I can't remember what episode you were, but you were
real early in the piece, I think.
one of the original gangsters, as we'll call you. So I run the Geared for Growth property investing podcast. So I started that it's almost 5 years ago now. So we had a great interview with yourself talking about your personal background as a lady in blue, and how you sort of found the light and started in the renovation game. Yeah. And we've had, I think, around about 170 episodes, all sorts of guests, from renovation experts like yourself to accountants, mortgage brokers, economists, buyers agents. So yeah, check it out. It's Geared for Growth, which is on Spotify and all that sort of stuff.
And I've seen you on a Facebook Live with another character one day, which was hilarious. There were a few of us on listening, but I think I was making most of the comments.
Oh, yes.
So you do guest speak on people's podcasts and all that kind of stuff. And marketing's been letting people know what your company does has been integral. Yeah.
I mean, from the very beginning, we didn't have full-time work, as it were. We started the business, we were working in consulting arenas where it wasn't a conflict of interest, and doing the business after hours on weekends, just to kind of go, is this going to work? Is this going to stack? So then we got to the point where, okay, yep, we need to jump out. We've got full-time work. And the first thing that I did with any spare time is I started writing blogs and writing for media, and had some good success, and got picked up by a few different media outlets that shared my stuff quite regularly. It took me a long time to get onto camera, because I'm an introvert at heart and I hate looking at my face and listening to my own voice. But I realized that people want to have a connection with a person, and I am passionate about it, and I think that kind of comes through. I mean, you would be hard pressed to sort of think about anyone being excited about tax legislation, but I actually am, as weird as it is.
That's okay.
Yeah, so I've been doing a weekly podcast for a long, long time, and I get invited on a lot of podcasts and present, at accounting expos and things like that. And I love just tapping into the expertise of other people, because if we think about property investing, and that is probably the main focus of our business. We do other services, but property investors are probably still the main client of ours.
Yep.
68% of property investors only ever own one property.
I agree.
And we really kind of want to move the needle on that, right? Because there's a fairly strong argument to say that is not enough to achieve the goals that probably got you investing to begin with. So if we can interview movers and shakers and people that are experts in the industry and get people in touch with this free education, then that sort of gives me a warm, fuzzy feeling.
Yeah, create momentum. Yeah. All right. So what's an important lesson that you've learnt in your career and your life? Oh, we're going deep, Mike.
Wow, this is very deep. I need a glass of Shiraz if we're going to go
It's
much
too
deeper
early.
than this. Yeah, I normally sort of have the depth of a kiddie pool, I think. Look, I think in business, I've learned that I kind of love and hate myself in equal measure. I'll explain that a little bit. I think sometimes the more I learn, the more I realize I don't know anything. But in business, you've got to sort of have the confidence that, yeah, okay, well, I've put in the work and I'm an expert in what I do. And it's not arrogant to kind of say, I have something to share that's of value, because I believe I do. And I believe a lot of people in a lot of industries do. And if you're struggling from self-confidence, or you're struggling to get that message out because you kind of think, oh, maybe I don't really know anything, you're withholding that from the world. And a lot of people have value trapped in them that they're not getting out there because they worry about how they're going to look and how they're going to sound. I've got thousands of hours of probably audio and video of me, and anytime I look at it or listen to it, I go, oh, right. But that's more a me thing, right? So that,
It's
I
a
think,
me
is,
thing too.
yeah, I
It's an
think
everyone thing.
most people are like that, right? I mean, if you love the sight and sound of yourself, you're probably a real estate agent, let's be honest.
A special shout out to all the real estate agents
Yeah, I've
listening
upset the orange timber mill industry and the whole real
and the
estate
real estate
industry.
agent.
Yeah, no, look, I think it's important to always be learning, but also understand that it's likely that you have a value, and if you are an expert in your field, then you ought to share it with people.
And I'm a big one for just getting out there and doing what you know, but being really open to bringing in people into your little world who know more than you do on certain things that you don't,
Yeah,
by
yeah,
being resourceful.
yeah, absolutely.
Same
And I
with
think,
renovating, don't have to do it all yourself.
yeah, I mean, you leverage the expertise of other people and you build a team. It's no different in say renovating or property investing or business. Like the clever people run these organizations a bit like a CEO. They hire the people to do the particular piecemeal things, and you ought to hire people cleverer than yourself, because like, you don't want to be the smartest person in the room, because you really cap your potential.
Is there somebody who really stands out in your world as being a key influence on?
That's a good question. Look,
I ask good questions, Mike.
yeah, you do. I'm not prepared for this at all. My influences are probably a little bit sort of weird and different to other people. I mean, I'm influenced by the early Greek philosophers. I'm influenced by people like authors like P.G. Woodhouse. I just think anyone that values the time that they have on earth, like, I think, whatever your religious belief, I'm of the opinion that you only get sort of one go at it,
Yeah.
and not to take yourself too seriously. And if you want to do something, then have a red hot crack. You owe it to yourself to try your best. So I don't necessarily look to, the modern day gurus like your Gary Vaynerchuks and those sorts of people, but, they all have some interesting things to say. So, I think broad influences are good.
Yeah, I agree. And it's really funny when I ask that question to some people, they talk about people that are close to them in their lives, like their parents or an uncle or somebody that helped them early in business. And other people do talk about, the marketers and the obvious ones. So I always like to ask that question. Mike, what does, just run through the exact services that your business covers? Insurance, I read somewhere.
Yeah, so a big passion project that we've taken on is insurance replacement cost estimates. So
Right.
the Insurance Council of Australia said pre-COVID that 83% of people are underinsured.
Yeah.
Now, with construction costs having risen so rapidly during the pandemic, pardon me, as I'm sure everyone is aware of, that figure is likely to be much higher than that. So what people don't necessarily realize is that if something is to happen to your property, let's say there's a fire or a flood, the cost to build that property again is not actually enough to rebuild the property, because you have to consider cost escalations with the time it takes to have that built. You've got to understand that there's consultants, architects, town planners that need to get that stuff through council. There's obviously demolition as well, because if your place burns down, it doesn't leave a nice, neat site. The place might be built too close to the boundary. So what was there before can't be built again. So there's a million different little bits of a replacement cost price that people don't understand. So we generated a flat fee of $600 plus GST across the country for residential and commercial, for anything under $10 million. So that's been a huge passion project for us, because Mother Nature's getting a little bit angrier, and we hate the idea of people being out of pocket, having to be tapped on the shoulder to say that they need to chip in. So that's something that we've been doing a heap of in the commercial space. In the residential space, a lot of people sort of don't necessarily understand that, so we've been trying to share that. So tax depreciation is the obvious one, resi, commercial, insurance stuff, and then construction cost estimating, whether it be for submitting a DA, whether it be for a detailed cost plan to go to tender if you're wanting a builder, whether it be a financier cost plan for a bank if you're wanting to have a bank fund a development project, or expert witness. We've got all sorts of different reasons. Really anything that involves how much it costs to build something, we've got something to sell people.
Yeah, no, that's absolutely brilliant. Thank you so much for joining me today. Is there anything you'd like to say in closing, Mike? Is there a big grand finishing statement?
Let's not set the bar too high, Belinda, but there's one thing that I wanted to share with renovations that people have taken a little bit of a bit from. When you're renovating, the materials can make a big difference for your depreciation outcome. I'll give you one example. The effective life of tiles is 40 years. So essentially you get 2.5% of what you spend each year for 40 years. The effective life of carpet is 8 years. So if you are putting in carpet, you're going to get a 25% rate of depreciation in year one versus tiles at 2.5%. Now, obviously, you don't make decisions just based on the tax outcome. You're probably not going to carpet a kitchen. I don't think that's going to be a recommendation you would
bathroom.
make. Yeah, exactly. But there are little nuances where you can kind of think, oh, look, if I can go either way on this space, there might actually be a hugely different tax outcome. So I'd encourage people to kind of understand that side of the materials and the tax implications. Again, it's not a reason, but if you're flipping either way, it could actually be a deciding factor.
That's such a valid point. I get so many questions these days about carpet versus some kind of hard flooring. So that's something I can bring up.
Yeah, exactly. And just to compare, so plant and equipment floor coverings are carpet, floating timber, and vinyl.
Yes.
Fixed ones that only give you the 2.5% would be things like polished concrete, the large timber floorboards rather than the floating timber, and tiling. So yeah, that's an important thing to understand. Yeah,
thank you. That's a really good point.
Pleasure.
So renovators and investors and mums and dads who think that they might be underinsured, and people doing construction and design and out there to do a small development, obviously they should go and contact MCGQS.com.au. Thank you so much, Mike. It's been an absolute pleasure having you on.
I had good fun. I hope people got something out of that.
You weren't as wacky as I was on your podcast. Crazy.
Well, it's only 10:30 in the morning, so next time we'll do one after.
In the morning too, actually.
All right.
I think I was very excited at the opportunity.
We had a lot of fun, so definitely go and check out that episode if you're listening.
Oh yeah, actually. Excellent. Thanks so much, Mike. Appreciate it.
Pleasure. Thanks for having me.